What's the best way to allocate assets for maximum wealth and maximum tax-free income? I'm going to show you this in context of our tax-free matching program. You've probably seen this diagram that I've drawn where I talk about the two types of assets, offensive assets and defensive assets. What you're doing really is building to your future income. So the thing you do is you come up with a number of how much income you want to have in the future. Let's say, if, for example, that number is $250,000, that's your income goal. And let's say right now you saved up, maybe around $2 million in assets. Now the problem here is conventional wisdom is going to go out and say, hey, you know what, based on like the 4% rule, and this is conventional wisdom, right? You need to really have about 6 million, in assets, which I would, total nonsense, but that's a whole nother video, the 4% rule. But, and then you start looking at that and you go, wow, I have to allocate all of my capital. I really have to make it grow. And if something goes wrong, I'm going to have big problems. There's a lot of stress to that, not because a lot of things have to go right in order to make that happen. But instead, we're going to do a more efficient strategy using the tax-free matching program. You allocate a portion of those assets, and so let's say it's 500K is allocated. Then remember, we have the bank matching, so the match on that, in this case, is close to 3-to-1. So for this example, we'll use, a $1.5 million match. Ooh, if I can put my comma in the right spot. So $1.5 million match. There we go. Now I have a $2 million asset positioned. Right, so now I have my $2 million growing, but I only had to use a smaller portion. And then we have calculators that run the numbers, and based on age, it'll tell us, what's the estimate of tax-free income. So let's say you're 45 years old, so it'll produce, roughly around $180,000, tax-free in income. And that's from age 65 to 90. So the key thing here is now, if you look at this, I've covered 72% of my income goal, but I've only used 25% of my assets. Okay, so that is a spectacular planning ratio, right? I've covered 72% of my goal with only 25% of my assets. So now I got my 25% of my assets allocated to defense. Now my other 75% can go to offense, where I'm swinging to the fences, deploying more leverage, acquiring more assets, acquiring businesses, building more income streams. That's really the process that takes wealth from 2 million to 5 million and 5 million to 10 million, is being able to deploy assets in a better way. Because what conventional wisdom would have you do is, if you've seen the charts on, you're going to build up wealth and it starts to build, then you just spend it down your retirement and you hopefully end up, with a little bit left over. But what scaling wealth does, and what I like to call scaling wealth, that's where you start to deploy, you start getting wealth, then you deploy leverage, tax control, right? And wealth continues to go up. And this is the path to the family dynasty. And you do that by using smarter strategies. Instead of trying to deploy everything and make everything go right, do it all on your own, you deploy tax control, financial leverage, do it in a smarter way, and that's a much safer way to do it. So this is a quick intro on how to allocate assets for maximum wealth, maximum tax-free income. My name is Denver Noes, President of Wealth for Life. If you have more questions, please feel free to reach out.